What if I told you the difference between the top 1% of traders and everyone else has almost nothing to do with intelligence or strategy? In fact, the world's best traders follow a daily routine so simple, most people completely overlook it. But hidden inside that routine are the habits that quietly shape every trading decision they make. Stay with me until the end, because the final habit might completely change the way you trade forever. Friends, let's begin with the first routine. This is the habit that almost every trader knows, but very few actually follow. Most retail traders wake up, grab their phone, open TradingView, check futures, look at Bitcoin, scroll through financial news, and within 5 minutes, their emotions are already controlling them. Before they even place a trade, their mind has become filled with fear, greed, excitement, or anxiety. Now compare that to the top 1% of traders. They don't start their day with the market, they start it with themselves, because they understand something most people never realize. You don't trade the market, you trade the state of your mind. If your mind is distracted, your decisions will be distracted. If your mind is anxious, your trades will become anxious. If your mind is impatient, your entries will become impatient. That's why elite traders protect the first hour of their day. Not because waking up early magically makes them profitable, but because that first hour determines how they'll think for the rest of the trading session. Some review their trading plan. Some spend a few quiet minutes journaling. Some simply sit without checking a single chart. It doesn't matter what the exact routine is. What matters is this. They refuse to let the market become the first voice they hear each morning, because once emotions take over, logic quietly disappears. Think about it. Have you ever opened your charts, saw a huge candle, and suddenly felt like you were already missing out? Nothing actually happened to you, but your emotional state changed instantly. That's exactly why professionals don't rush to the charts. They prepare their mind first, because they know the quality of today's decisions depends on the quality of today's mindset. Here's a simple truth. The market opens at the same time for everyone, but not everyone enters it with the same mind. And that's where the difference begins. A calm mind sees opportunities, a rushed mind sees emergencies. The market doesn't decide which one you'll become. Your morning routine does. But here's what's even more interesting. Even with the perfect mindset, professional traders still refuse to open a single position immediately, because before risking even $1, there's one routine they never skip, and that's exactly what we'll uncover in Routine 2. Now let's move on to Routine 2. This is where the top 1% of traders separate themselves from everyone else. Most traders open their charts and then decide what to do. Professional traders decide what they'll do before the market gives them a reason to react. That single difference changes everything. Think about it. The market starts moving. A candle suddenly shoots higher. Retail traders immediately think, should I buy? A candle drops fast. Now they think, maybe I should sell. Notice what's happening. They're letting the market make their decisions. Professional traders never do that. Before the opening bell, they already know three things: where they'll enter, where they'll exit, and exactly how much they're willing to lose. Nothing is left to emotion, because once the market opens, there isn't enough time to think clearly, there is only time to execute. Imagine a pilot preparing for takeoff. Does the pilot wait until the plane is in the air to decide what to do if an engine fails? Of course not. Every important decision is made before takeoff. Trading works the same way. Elite traders don't improvise, they prepare. That's why they create a simple checklist before every session. What is today's trend? Where are the key levels? What setup am I waiting for? How much will I risk? And one final question. If my setup never appears today, am I willing to do nothing? That last question is incredibly powerful, because the market doesn't pay you for being active, it pays you for being patient. Most traders feel the need to trade every single day. Professionals feel the need to protect their capital. Those are two completely different mindsets. When you have a plan, you stop chasing candles, you stop reacting to every move, you simply wait for the market to come to you. And that's exactly how professionals stay calm while everyone else panics. Because confidence doesn't come from predicting the market. It comes from knowing exactly what you'll do before the market even opens. But here's where things get interesting. Having a plan still isn't enough. Because even with the perfect plan, most traders lose control the moment they see a fast-moving market. The top 1% don't. Why? Because they follow one routine that almost every retail trader ignores. And that's exactly what we'll uncover in Routine 3. Now let's move on to Routine 3. This is one of the hardest habits for any trader to master, because it requires doing something that feels completely unnatural. Waiting. Most retail traders believe the more trades they take, the more money they'll make. But the top 1% think very differently. They don't get paid for being busy, they get paid for being selective. Imagine you're fishing. Would you throw your net into every part of the ocean, or would you wait until the fish come to the right spot? Professional traders do exactly that. They don't chase price, they let price come to them. Here's what usually happens. The market suddenly explodes upward, green candles everywhere. Social media says, "Don't miss this move." Your brain immediately starts screaming, "Buy now," before it's too late. That's not opportunity, that's FOMO. And FOMO has emptied more trading accounts than bad strategies ever have. The best traders understand one simple truth. If a setup forces you to rush, it probably isn't your setup. That's why they only trade A-plus opportunities, not B setups, not average setups. Only the ones that match their plan perfectly. And if that setup never appears, they simply don't trade. For many beginners, that sounds crazy. You mean they can sit in front of the charts all day and not place a single trade? Yes, because they know something most traders never learn. Every trade you don't need to take is money you don't need to lose. Patience isn't wasted time. Patience is part of the strategy. Professional traders would rather miss 10 average trades than force one bad trade, because one emotional decision can erase weeks of disciplined work. That's why they never ask, "How many trades can I take today?" Instead, they ask, "Is this trade truly worth risking my capital?" That single question changes everything. It removes emotion, it removes pressure, and it replaces excitement with discipline. The market will always create another opportunity, but your capital, once it's gone, becomes much harder to recover. That's why the 1% don't chase the market. They let the market earn the right to be traded. But here's the surprising part. Even after finding the perfect setup, the top traders know something can still go wrong, and what they do after entering a trade is what truly separates them from everyone else. That's exactly what we'll uncover in Routine 4. Now let's move on to Routine 4. This is the habit that completely changes the way professional traders think. Before they ever click the buy or sell button, they've already accepted one possibility. This trade could lose. Most retail traders do the exact opposite. They enter a trade expecting it to win. They imagine the profit. They calculate how much money they'll make. And when the market moves against them, panic takes over. Why? Because they were emotionally unprepared to lose. The top 1% never make that mistake. They understand something most traders spend years trying to learn. Every trade is just a probability, not a promise. Even the best setup can fail. Even the strongest trend can reverse. That's why professionals never ask, "How much can I make?" They ask, "How much am I willing to lose if I'm wrong?" That single question protects them from emotional decisions. Before entering a trade, their stop loss is already decided. Their risk is already accepted. Nothing changes after they enter. Because changing your plan in the middle of a trade usually means one thing. Your emotions have taken control. Think about it. Have you ever moved your stop loss just a little farther away, hoping the market would come back? Almost every trader has, not because they had a better analysis, but because accepting a small loss felt more painful than risking a bigger one. That's exactly how small losses become account-destroying losses. Professional traders don't fight the market, they respect it. If their stop loss is hit, they exit. No anger, no revenge, no second guessing, because they know protecting capital is more important than protecting their ego. Here's a powerful truth. Small losses build long-term survival, Big losses destroy opportunity. The top 1% know they can always find another trade, but they can't replace reckless decisions so easily. That's why they never become emotionally attached to a position. A trade is simply one business decision, nothing more, nothing less. And that's what keeps them calm while everyone else is reacting emotionally. But here's where the biggest difference appears. Closing a trade isn't the end of their routine, it's actually the beginning of the next one. Because what the top 1% do after every trade is the reason they keep improving year after year. And that's exactly what we'll uncover in Routine 5. Now let's move on to Routine 5. This is the habit that quietly turns average traders into exceptional ones. Most traders think the job is over once they close a trade. If they win, they celebrate. If they lose, they try to forget it. Then they move on to the next trade. Professional traders never do that. Because they understand one simple truth. Every trade leaves behind a lesson. The question is, did you capture it? That's why the top 1% keep a trading journal, not because it's exciting, but because memory is unreliable. Think about your last 5 trades. Can you remember exactly why you entered each one? What emotion you were feeling? Whether you followed your rules? For most traders, the answer is no, and that's exactly why they keep repeating the same mistakes. Professional traders don't rely on memory. They rely on evidence. After every trade, they take a screenshot. They write down why they entered, how they felt before entering, whether they followed their plan, and most importantly, would they take the exact same trade again? That one question changes everything, because it forces them to judge the quality of the decision, not the result. A good trade can lose, a bad trade can win. But over time, only good decisions create consistent profits. That's why the best traders don't obsess over making money every day. They obsess over becoming slightly better every day. One mistake identified today can save hundreds of mistakes in the future. One lesson written down today can protect your account months from now. The journal becomes a mirror. It shows you patterns you would never notice on your own. Maybe you're impatient. Maybe you always break your rules after 2 losses. Maybe you perform worse on Fridays. Without a journal, you'll never know. The market gives everyone opportunities, but only the traders who study themselves continue to improve. That's why the top 1% don't just review their charts, they review their behavior. Because in the end, the biggest pattern you'll ever discover is your own. But even after reviewing every trade, their day still isn't over. There's one final routine they follow that protects them from repeating the same emotional mistakes tomorrow, and that's exactly what we'll uncover in Routine 6. Now let's move on to Routine 6. This is one of the most overlooked habits in trading. Most traders believe their job ends when the market closes. Professional traders know that's when the real work begins. After the market closes, and most people immediately move on, they watch YouTube, scroll through social media, or start looking for tomorrow's trades. The top 1% do something different. Before they think about tomorrow, they review today. Not to judge whether they made money, but to judge whether they followed their process. Because they understand one powerful truth. Profits can lie, process never does. A trader can make money by breaking every rule. That doesn't mean it was a good trade, and a trader can lose money while following every rule perfectly. That doesn't mean it was a bad trade. Professional traders separate results from discipline at the end of every trading day. They ask themselves 3 simple questions. Did I follow my trading plan? Did I control my emotions? What is one thing I can improve tomorrow? That's it. No excuses, no blaming the market, just honest self-evaluation. Because every single trading day is feedback, and feedback is what creates improvement. The top 1% aren't trying to become perfect overnight. They're trying to become just 1% better every day. It sounds small, but over months and years, those tiny improvements become an enormous advantage. That's why they don't measure success by today's profit. They measure success by today's discipline. Because discipline compounds, just like money does. Here's something most traders never realize. The market doesn't reward the person who learns the fastest. It rewards the person who improves consistently, and consistency is built one day at a time. One review, one correction, one better decision than yesterday. That's how professionals quietly separate themselves from everyone else. But here's the final piece of the puzzle. Even after reviewing their day, there's one routine they never ignore, a habit that protects their focus, their discipline, and their performance for the next trading session. And that's exactly what we'll uncover in Routine 7. Now let's move on to Routine 7. This might be the simplest routine on this list, but it's also one of the hardest to follow. Most traders believe becoming profitable means spending more time in front of the charts. The top 1% know the opposite is often true. They know when to stop. Think about what happens after a long trading session. Your focus begins to fade. Your patience gets weaker. Small mistakes become bigger mistakes. And before you realize it, you're no longer trading with discipline, you're trading with fatigue. Professional traders recognize this. That's why they don't force trades just because the market is still open. When their trading plan is complete, they step away because they understand something most retail traders never do. The goal isn't to trade all day. The goal is to make high-quality decisions, and high-quality decisions require a fresh mind. That's why many elite traders spend the rest of their day doing something completely unrelated to the market. They exercise, they read, they spend time with family, they go for a walk, not because they're avoiding the market, but because they're protecting the mind that makes every trading decision. The market will always be there tomorrow. Your mental energy won't. Here's a powerful truth. The market doesn't reward the trader who watches the screen the longest. It rewards the trader who shows up with the clearest mind. That's why the 1% don't let trading become their entire identity. They have a life outside the charts. And that balance keeps their emotions under control, because when your entire happiness depends on one trade, you'll make emotional decisions. But when trading is simply one part of a balanced life, you'll make rational ones. The best traders know that success isn't built by doing more, it's built by doing the right things, then knowing when to stop. And now, we've reached the final routine, the one routine that quietly brings every habit you've learned together, the routine that transforms trading from a stressful game into a professional business. And that's exactly what we'll uncover in the final routine. We've reached the final routine, and this is the habit that brings everything together. You can have the perfect morning routine. You can follow a trading plan. You can wait patiently for A-plus setups. You can accept losses. You can journal every trade. You can review every trading day. But none of it matters if you're obsessed with the result of your next trade. That's the biggest difference between the average trader and the top 1%. The average trader wakes up asking, how much money can I make today? The professional trader asks, can I execute my process today? That one shift changes everything, because the market has never promised you a winning trade. It only gives you opportunities. The only thing you truly control is how you respond to them. The top 1% understand this. They don't judge themselves by today's profit. They judge themselves by today's discipline. If they followed every rule and still lost, they consider it a successful day, because they know one losing trade doesn't define their future, but breaking their process might. That's why they never chase yesterday's loss. They never become overconfident after yesterday's win. Every trading day starts with the same mindset. Follow the process, manage the risk, let probabilities do the rest. Over time, that routine becomes a habit, that habit becomes discipline, and that discipline becomes consistency. Here's the truth that most traders spend years trying to understand. The top 1% don't have superhuman intelligence. They don't predict the market better than everyone else. They simply repeat the right habits, day after day, month after month, year after year. Success in trading isn't built in one trade, it's built in your daily routine. So the next time you sit down in front of your charts, don't ask yourself, will I make money today? Ask yourself, will I follow my routine today? Because profits come and go, markets rise and fall. But a disciplined routine will always be your greatest edge, And that's the routine that quietly separates the top 1% of traders from everyone else. If you found this video valuable, hit the like button, subscribe for more trading psychology content, and share this video with a trader who needs to see it. And before you go, which routine do you think will have the biggest impact on your trading? Let me know in the comments below.